A very good afternoon to you, great corp learners. My name is Mr. Simbi, and welcome once again to our accounting lesson. This lesson is brought to you by the Gauteng Department of Education in collaboration with Saibono Discovery Center. It is always a joy and a pleasure for me to have you in my class every Friday afternoon. Exactly at 2 p.m., I'll be here so that we can do a bit of calculations. I know you're preparing for your control test, and the June exam is now around the corner. So as I promised last week, I am going to be doing the statement of financial position. In the previous weeks, I have done the statement of comprehensive income. I've done quite a number, and we did several adjustments. But the way we did it, we were not just doing the statement of comprehensive income in isolation. We were able to incorporate adjustments that affect the statement of comprehensive income, and we're recording them in the statement of financial position as well. So we can say we have been doing the statement of financial position. In today's lesson, I'm just going to focus on the statement of financial position alone. Let us go and see. Here are my objectives. I am going to do the tangible assets, all right? And I'm going to do the format on the statement of financial position. Some of you would find in other material, it may be written as a balance sheet. So when you hear me say balance sheet in today's class, just know Mr. Simbi is referring to the statement of financial position. And then we're going to complete the statement of financial position together. Now, let's begin. Now, it is very important, I think I say this almost in every class when you attend the class, that remind your teacher to share with you the worksheet. There is a worksheet that will be sent to you every Friday morning, and if it's possible, have the worksheet printed so that you can be able to work on that particular worksheet. Okay, so as we do our format of the statement of financial position, this comes out from what you've been doing over the years. Some of you call it the accounting equation. Yes, the accounting equation, which states that our assets, so here it is our assets are equal to, the O stands for owner's equity, so it is owner's equity plus liabilities. Okay, so you will find that when we do the accounting equation, it informs us of the balance sheet that we're going to be doing, that it has to balance. Your total assets must be equal to the total equity and liabilities, that these amounts must give you the same figure. Then we can say that our balance sheet has balanced. So we're going to do that together today so that you can see that it is balancing indeed. So assets, this is how the company invested its funds. These are what we call assets. And our assets must be equal to the shareholders' equity. So in the previous weeks, I've been teaching on your ordinary share capital and your retained income. I had done a lot of note number 7 and note number 8. These are notes that speak to the balance sheet as well. So once you are done with your ordinary share capital note and your retained income note, that forms what we call the shareholders' equity. And when you have the shareholders' equity, you then add your liabilities, and then this what gives us the total, therefore. And the liabilities, it is how the company also raises capital. When I do the cash flow statement with you, you will see the forms of finance that a company can use in order for it to continue operating. All right. Now, you will see that in grade 10, we did what was known as the sole trader. And this was a one-man business. And in grade 10, we had the equity, and we only did note number 7, which is capital. So this is where we ended. In grade 11, we then did another form of ownership called the partnership. This is what we did in grade 11. And we then had the capital, which was note number 7, but we had a new entry in grade 11, which is known as our current accounts, and that was our note number 8. Some of you can remember this one, where we would share our profits. In this year, in your metric year, we are now dealing with companies. By now, you know this. We are dealing with companies, and we will now have a new aspect, which is shareholders' equity. Remember, For you to have shareholders' equity, you must have your ordinary share capital, which you get after you open note number 7, where you have your 2 million here. And you also have what we call retained income, which you get after opening note number 8, so which is 200,000 there. So if you add these two amounts, that is how you get your 2.2 million. Now, to further emphasize on this format, I'm going to show you some interesting calculations which will help us on this format. Remember, our assets is equal to owner's equity plus liabilities. When you look at our assets, we have two classes of assets, if I may say so. We have first what we call non-current assets. Non-current assets are assets that will be in the business for 12 months and more. And examples, we have your tangible fixed assets. Another one that you're going to have here is what we call financial assets. So we also have what we call financial assets. And under our financial assets, we have our fixed deposits. So here we're going to have our fixed deposits. There it is there. So we would add our fixed tangible assets plus our financial assets in order for us to get our non-current assets there. And remember, for you to get to tangible fixed assets, you will open note number 3. In today's class, I'm going to do that with you. And then that I had already mentioned that one, your financial assets, that is your fixed deposits. And then you are going to get what we call current assets. And under your current assets, you're going to get your inventories, note number 4, your trade and other debtors, your cash and cash equivalents, which is note number 6. That gives you your assets. So you have your non-current and your current assets over there. Let's move on now to getting our total assets. And after that, we come now to the next part. In the next part, you have your equity and liabilities. Equity and liabilities. So we're talking about our capital and reserves. That is the shareholders' equity. We begin with ordinary share capital, that is your note number 7, and your retained income, which is your note number 8. I've mentioned these ones. Then you have what we call non-current liabilities. These are liabilities that will be in the business for more than 12 months. For more than 12 months. Okay, as you can see here, this is the mortgage bond, which has a maturing period of more than 12 months. So as long as our loan is going to be paid for more than 12 months, it becomes part of our non-current liabilities. And then we have current liabilities. These are debts, liabilities, debts that the business can settle in 12 months or less. So the good examples are your trade and other creditors, trade and other payables, which we open note number 9 over there. You have your bank overdraft, and then you have your short-term loans. This is your current portion of the loan. These are parts of the loan that will be payable within 12 months over there. And then you end up with the total equity and liabilities. You can see there are certain aspects that are left out, such as your SARS income tax. It depends on the adjustments that would have been given in the particular examination. I'll show you when we do one together how you can adjust such adjustments. Let's go on. Here's how to earn easy marks when completing your statement of financial position, the balance sheet. You should know your format. Very key. Very, very important. Know your format. Know what goes where. Accounting has to be in your fingertips, that when you are calculating, it's easy to pick certain figures. So make sure you know your format. And then always start with the pre-adjustment figures from the trial balance. So once you're given your trial balance and you're going to focus on the balance sheet account section, open brackets already and put in your figures. Then later you go on to your adjustments. So it is very important that you open your brackets. And then record the figures in the balance sheet to earn part of free marks. Start with adjustments, okay, that are in the nominal account section. That is after you have already opened your brackets. Then you can do those adjustments. Let us go now to our easy marks, our low-hanging fruits. It is very important that when you see such questions, don't leave them. Answer them. For these ones can earn you some really good marks. Okay, so let's do this one together and hear what it says. It says, choose the description from column B, this is your column B, that matches the term in column A. Here, write only the letter that is A to E next to the question numbers. So the first one is independent auditor. Which of these would relate to the independent auditor? I'll give you a second to read so that you can see if you do know which of these can relate to your independent auditor. It is E, that independent auditors express an unbiased opinion. Independent auditors express an unbiased opinion on the reliability of financial statements. So my number one there becomes E. Number two, capital employed. When you talk about capital employed, we're talking about the total of ordinary shareholders' equity and our non-current liabilities. So that becomes D over there. Then the next one, current liability. Our current liabilities, these are debts to be settled within 12 months. You remember I taught you this one just a few minutes ago. Okay, these are liabilities or debts to be settled within 12 months. And then lastly, a financial asset. Your financial asset is an investment such as fixed deposit over a 3-year period. That is A. So two of these ones I'd already spoken about them. Okay, so let's go further now to our format. In this one, I have put in certain figures and I want to show you how to get the missing figures. You will see that in accounting, it's more like we are solving a puzzle. And the last thing you'd want to do with accounting is to fight with it. Allow the figures to come out as you are working. So you would find that if one figure is missing, do not take much time there. Move on to the next part. And that part will assist you to get the figure that is missing. So let's see if we're able to find out some missing figures. For example, I want to get my fixed tangible asset amount here, because I know that if I take my financial asset, which is 160, I add it with my fixed tangible asset there, I should get my non-current asset. So it is easy, therefore, for me to get my fixed tangible assets. If I take my 4,980,000 there, and I subtract the 160,000, if I close that bracket, let's see if we can have an adding machine. So it's 4,980,000. If I subtract 160,000, I should get my 4,820,000. So that becomes my fixed tangible assets here, 4,820,000 over there, like that. Okay, so it is one of the things that you must learn to do as you do your statement of financial position. And we can do the same with our trade and other receivables. That means I can take the total here, which is 1,820,000. And then I say of that 1,820,000, I subtract the 956,000 minus 956,000, and I subtract the 2.5 over there. It should give me my trade other receivables over there. Okay, let's see if we can do that together. So I'm going to say 1,820,000, like that. Then I subtract my 956,000. I subtract it as well, 2.5, like that. And then I end up with 861,500. So I come here, it's 861,500, like that. And I should know that if I add my non-current assets here plus my current assets here, it should give me total assets over there. So let's see if we can do that. So I'm going to say my non-current assets, which is 4,980,000. Then I'm going to add my 1,820,000, like that. It will give me 6.8 million, which is my total assets. So let me bring it here on the top, 6.8 million, like that. Then I'm done with my assets, my total assets, you will see that in most balance sheets, there will be missing figures, balancing figures, that you have to solve the puzzle, move this amount and subtract it from that amount to get that particular missing amount. It all has to do with you knowing your format. Once you know your format, it becomes a walk in the park. Let's see the next part. The next part is our equity and liabilities. Let's go to our equity and liabilities. So on our equity and liabilities, we're now going to say, I don't have my share capital here, and I don't have my loan here. So no amount there, no amount there, but I'm given the total. Remember, my total assets was 6.8 million. And here I also have my easy one. Okay, how do you get your trade and other payables? You simply say your total current liabilities, which is 921,800, then I subtract the 45.3 and I subtract the 148,000. Let's close bracket. Let's see if that can come out. So it is my 921,800. There's an 800 there, Mr. Simbi. 921,800. And then I say minus 45.3 minus 45.3 minus 148,000. That is going to give me 728,500. Okay, 728,500. So I come here, that is my 728,500, like that. Okay, and then let's see if I can get my loan. Now, with the loan the examiner wanted to see in this part, or I wanted to see, are you able to tell that this 148 is a current portion of loan? It would have come from your mortgage loan, because once I have my non-current liabilities, I subtract whatever portion of the loan that will be paid within the next 12 months. So I'll come in, then I'll say minus 148,000. So it will be that same 148 that I bring here now. So you see where the 148 comes from. It comes from your non-current liabilities, and we bring it to your current liabilities. But in this case, I had it already under my current liabilities. It was for you to know that it has to be taken out from the non-current liabilities first. So it will be 740 minus 148. Let's see. So I have my 740,000 there minus 148,000. Like that. That is going to give me 592,000. So I'm coming here to say 592,000, like that. So here it's going to be 592,000. This is easy now. So it means I can get this figure here now. I can get that one. Okay, my shareholders' equity. How do I do that? I'll take my total equity and liabilities, which is my 6.8 million, and then I say minus my current liabilities, which is 921,800. Then I say minus again the 592,000. Let's close bracket. So I'll come here, then I'll say it's 6.8 million minus 921,800 minus again 592,000. And that is going to give me 5,286,200. So I'll come here, that is 5,286,200. To get share capital is easy now. So I'm just going to say the same 5,286,200 minus 218,200. How much is that going to give you? So just say this one minus 218,200. And that is going to give me 5,068,000. 5,068,000. Like that. And then I was just doing the format with you. Someone is saying, Mr. Simbi, where are the adjustments? There were no adjustments here. I just wanted to show you, how do we get these missing figures? How do we come about placing some of the missing figures? Format is of great importance. Know your format. Let's go on. We're going to do now an activity. NSC, November the year 2020, and my focus is on question 4. Okay, so this is your NSC November for the year 2020. 20. If you are ready, let us begin. The question reads, question 4, fixed assets and financial statements. Avengers Limited, the information relates to the financial year ended 31 March 2020. Required, refer to information B. Calculate the missing amounts denoted 1 to 4. So, I want to touch on a number of notes that affect our statement of financial position. And you'd know your note number 7. You'd know your note number 8. And I'm going to treat them here in today's class. But one of the interesting notes that you have to know is your note number 3, fixed tangible assets. If it gives you problems, the best way to deal with it is to do it constantly, over and over again. I know you have told me that you did not do it properly in the previous year. So we're going to do it over and over again, that you get to understand it better and better. Is that okay? So make sure you have a calculator close to you, because we're about to start calculations. Are you ready? Let's go then. Okay, so here's the information that we are given. And we continue on to the next one. Here is more information again that we are given. And then here is our note number 3, our fixed tangible asset note. And here's our adjustments, additional information. Here's more information again that is to do with share capital and dividends. And then here's the last batch of adjustments. Now, let's come here and begin our calculations. In this question, we are required to get information that is missing. So, like in this case, we are calculating the cost there. That is number 1. It is very important to know that when you are given note number 3, there are certain aspects that relate to each other. Can I show you? Make sure, if you don't have a color pen, just draw some signs that I'm going to draw with you. For example, if you look at your cost here, your cost will relate with additions. These are called additions at cost. So your cost will relate with your additions at cost here, which also relate with your cost at the end. So this would be cost at the beginning, and this would be cost at the end. So your cost. All right? And then you also see that in this question, we are given a disposal of 850, and we're told land and buildings, a building on a separate property was sold at cost. So we want to know what was the cost at the beginning. Yet we're also told this one that we sold is a disposal at cost. So that becomes easy. I want to give you a simple key that can help you. When you're on note number 3, you can draw a straight line like this. And you say, when you go down, you add. But when you go up, you subtract. Can I say that again? Okay, I'm going to say it again. When you go down, you add. But if you go up, you subtract. You respect the signs. You keep the signs as they are. Okay? So, in other words, it means if I want to get that one, I'm going to say 9,650,000, and I'm going up. So I'm going to subtract. So I'm going to say minus. But I'm subtracting a negative amount. So it's a minus again. 850,000. And you guys know that once you have a minus, it becomes a plus. So in other words, I end up with a 9,650,000 plus 850,000. Like that. Let's see if we bring the adding machine. 9,650,000 plus 850,000. That gives me 10,500,000. So I'm going to come here. My answer to number 1 is 10.5 million. 10,500,000. That becomes my answer there. We good? Can I go? Okay, let's go on. The next one is number 2. we are required to calculate depreciation. Very key now, very key. So I want you to have your calculator, because in this place, we're going to do interesting calculations. I think from the beginning of this year, in every lesson, I am doing calculations that pertain to depreciation. Note number 3, assets being disposed. All of this. I've also dealt with the 1 rand residual value already. So you should make sure that if you've missed any of my classes, go back, watch them on this very same channel. You'll find my previous classes. From the beginning of the year, I have been having classes. Thank you for joining us today. We're happy to have you. Now, I'm going to do certain calculations here that pertain to depreciation. And what they want us to do is to give them depreciation for the year. When I calculate depreciation for the year, I know that I calculate for my son, sold, old, and new. I calculate for my son, sold, old, and new. A new vehicle was bought. So we have a new, and the new one was bought. Vehicles are depreciated at 20% per annum on cost. Very key, very key. So in this case, we don't have a sold. Okay, so let's come and we calculate our old first. So the one that we have from the beginning, this is cost at the beginning. So what we have at the beginning here, what we have at the beginning here, that is our old. It has been there from the beginning, so it's old. So how much is that going to be? That's going to be my 1,281,000. 1,281,000. That's my old. And my depreciation rate is 20% per annum. And my old will always be there for 12 over 12. So remember, here's my old. It will always be there for 12 over 12. And then, let's bring the adding machine. Let's see. That's 1,281,000. 1,281,000. I multiply that by 20%. Okay, times 12 over 12. All right. Okay, someone is saying, Mr. Simbi, show it to us properly. Okay, so multiply by 20 over 100. Then we multiply again by 12 over 12. That's 12 over 12. Like that. And then that's going to give me 256,200. So that's my depreciation here. 256,200. That's my depreciation for my old. The old is the one that we had from the beginning. We good? Let's go now to the new. New. Have we acquired a new vehicle? Where do we see that? Additions at cost. That is my new vehicle now. My additions at cost. So I'm coming here and I'm going to say my additions is 625,000. And I'm multiplying that by 20 over 100. Should I say 12 over 12? Certainly not. Why? When did we acquire this new vehicle? On the 1st of January. Now, here is very, very important information that I hope you picked up when we began. When is the financial year ending? In this question, the financial year is ending on the 31st of March. Yes, you are used to the one that ends on the 28th of February. This is very important, my dear friends. When you read your information, make sure you understand the end of the financial year. It tells you when it began. It can be March. It can be June. It can be December. Just make sure you read your information and understand it properly. Don't always assume it is February. Don't make that assumption. So I'm going to come here. Then I'm going to say, for how many months have we had this asset? From the date of acquisition, from the date we bought it, for how many months did we have it? When did we buy it? January. So we count January, February, March. How many months is that? That's 3 months. So come here. It's 3 over 12. Come here, my good friend. So we say 625,000. 625,000. Multiply that by 20 over 100. Multiply that again by 3 over 12. How much is that going to give me? 31,250. So I'll come here. I get my 31,000. 250. So I now have my depreciation for my old and my new, which is 256,200 plus 31,250. I close my bracket. That gives me how much now? Okay, you tell me how much you get. So let's punch them in nicely. 256,200. I add my 31,250 like that. How much you get? 287,450. So my number 2 here becomes 287,450. That is what you bring over there. Are we good? Okay, that becomes your depreciation for the year. Very, very important. Whenever you see the examiner has shaded a particular area, they're saying, do not write here. So when you see a shaded area, do not write in the shaded area. Can I repeat that? Do not write in the shaded area. It's not for you. Okay, so I'm not going to write anywhere here because the examiner is saying not to write over here. Can I go to the next part? Let's do that together. Let's do that together. Disposals. It is very key to know that when I record my disposals here, I record my disposals at carrying value. At carrying value. It's not just disposal, it's disposal at carrying value. So the examiner is saying, tell me what was the carrying value of the asset on the day we disposed. That's what we want to calculate in this case. All right? Okay. Are you ready? Let's do it together then. Can I do something that you did in grade 11? Asset disposal. Let me open it here. We can draw a line. Okay? And what do we call this? Asset disposal. Okay. So we're told old equipment with a cost price of 21,000. So I know that on my debit side, that's grade 11 now. On my debit side, I would come, then I would say equipment, and I'll bring my 21,000. They say was sold. Was sold. That means we must write it off the business books in this case. The accumulated depreciation was 15,000 on 1 April. 1 April 2019 is the beginning of the financial year because remember, it is ending on 31 March 2020. Very key. Very, very key. So I'm coming here and I'm going to say accumulated depreciation. I open my bracket. How much was the accumulated depreciation for the previous years now? I've been told 15,000. So I'm coming here, it's going to be 15,000 there. Then I say, plus I know that we have used this equipment in this year. So if we used it in this year, it must lose value to depreciation. So I must calculate that one then. Can we do that together? Let's do that. Very important. Equipment is depreciated at 15% per annum on the diminishing balance method. Okay, so I know that if I'm using my diminishing balance method, I'll say cost. How much is my cost? 21. 21 minus accumulated depreciation. How much was that? 15 minus 15. That gives me what I call carrying value. How much is that? 6,000. Now, when I have my carrying value, then I can say multiply by what now? By 15%. How many months did we have it for? Remember, we had it from the beginning, which is the 1st of April. When was it sold? On 30 September. Let's use the fingers. So we say April, May, June, July, August, September 30. So we count September. How many months do you see? 6. So I have my 6 months of a year. 6 over 12. Can we bring the adding machine? Welcome back, my good friend. So we say 6,000 multiply by 15 over 100. And then I multiply that again by 6 over 12. Aha. Oh, I get 450. So my depreciation for this year is 450. That means I now need to go and add it to my accumulated there, 450. So I'll say 15,000 plus the 450. That gives me 15,450. We good. Now, disposal at carrying value. What does that mean? Give us the carrying value of the asset that we have sold. Can I come back again to my method? How do I get carrying value? I say cost 21,000 minus accumulated depreciation. It is now 15,450. It is now 15,450. 15,450. Then I will get carrying value. How much is that going to be? So I'll say 21,000 minus 15,450. That is going to give me 5,550. So that gives me 5,550. Someone is saying, Mr. Simbi, I know a quicker way that you could have got that figure. What is that way? Someone is saying, Mr. Simbi, you could have taken the carrying value at the beginning of the year. How much was that carrying value at the beginning of the year? 6,000. Okay, so Mr. Simbi, you could have taken the carrying value at the beginning of the year, subtract depreciation, it will give you carrying value at the date of disposal. Let's see if that's going to work. How much was the carrying value at the beginning of the year? 6,000. So 6,000 minus my depreciation, 450. And that would have given me 5,550. Like that. I think it makes sense. Does it? Certainly it does make sense. So this is how you would have done it if you would find such a question. So if I'm coming here, my disposal at carrying value is going to be 5,550. And remember, it must always be in bracket. Every time it has to be in bracket. Can I go on? Let's go on now. All right. So eventually you're going to take your amounts and then they go on to your balance sheet. But I'm going to show you how to get that figure. So do not worry as of now. Let's continue. And then I'm going to show you when we are concluding the question. The next aspect that I need to emphasize on, is on your note number 7. Okay. So I just received a question which was saying, Mr. Simbi, which figures would you take from note number 3? If you were to take figures from your note number 3, you would be taking your carrying values. Which is that one, and that one, and that one. That is what you would bring here. Hence, I was saying, don't worry about it. I'll show you when we conclude. But if we're given these figures here, if we're given this figure, and that figure, and that figure, that is how we would have added to get the fixed tangible asset here. Okay, but in this case, we were not given the figures. So I'll show you when we get to that part towards the end of the lesson. So in this part now, we are given share capital information. So this has to do with ordinary shares, the issue of shares, and the buyback of shares. If you check, I have made it policy, okay? It has been life of these lessons that in every lesson, I'm touching depreciation. In every lesson, I'm touching ordinary share capital. In every lesson, I'm touching retained income. That would break my heart. If in any test, you are tested on these 3 aspects and you cannot do, no, we can't afford to do that. We are here to make impact. Once you follow what I'm showing you, it is very easy for you to answer any type of exam question that may arise. So if you've missed any lesson, please do go and watch those lessons. Okay, so we are required in this case to do our ordinary share capital. Remember, in this part, we are focusing on our issued. We want to know what has been issued. So it is our issued year. Let's begin then. We are given in 2019, so this becomes the beginning, 4.8 million. That means I'm coming here, 4.8 million. This is in rands. But we are told now that at the beginning, on the 1st of April, we had 800,000 ordinary shares in issue. That means I'm coming here and I'm saying 800,000. Then I'm going to say shares in issue, shares in issue at the beginning, which gives us the 4.8 million. Okay, then 400,000 ordinary shares were issued. We then issued 400,000. Okay, shares issued. 400,000 issued. At what price? We don't know. Can we get this one? We can't at the moment. What do? I continue. You see, the problem that you have is you want to fight with these figures. Don't fight with them. Easy. Continue. And then we're told 60,000 ordinary shares were repurchased. That means I'm coming here. You know, in my class, no bracket, no mark. You don't put a bracket, I don't mark that figure. You need to put brackets to show me that you are subtracting this particular amount. So brackets are of great necessity. I cannot overemphasize the need for brackets. So once you hear repurchase in your mind, you think brackets. Have I even put any figure? No. But what have I put in? Brackets already. So brackets are a standard procedure whenever there is a repurchase of shares. So I come here. Then I say, how many shares were repurchased? 60,000. 60,000 shares. And what happened? These were repurchased. Like that. Repurchased. But now we come to the information. Average price was 7 rand. Oh. So in this question, they did not want me to calculate the average price. They gave it to me. But the repurchase price is 10 rand 80. Now I'm given two figures. I don't know which one to use now. Okay. Remember the famous triangle. I know that if I'm given the 10 rand 80, that is what is going to go to the next topic which we're going to do, which is called cash flow statements. So here I'm going to bring my 10 rand 80 here at the top. 10 rand 80 comes to the top. Okay. And then my ordinary share capital average price comes here. 7 rand here. And then the above or more goes to my retained income. How much is that? 10 rand 80 minus 7 rand. We can do that one. We don't need a calculator. That's going to be 3 rand 80. Okay, we're good. So which one now goes to my ordinary share capital? Average price. That's 7 rand. So I'm going to come here and I'm going to say add 7 rand. Now we need the adding machine. 60,000. That's 600, Mr. Simbi. Now it's 60. 60,000, multiply that by 7 rand. How much is that going to give me? That's going to give me 420,000. So I come here, I get my 420,000 like that. Okay. Still, I don't have certain figures. Should I worry? If I were not given the average price, how would I have calculated it? I would have said my total here divided by that there, and it would have given me 7 rand. Okay, so if I had not been given the average price, it would mean I would have to say my 4.8 million plus my unknown amount. It would give me this other figure, which I'm going to call A now. If I take my A, I divide it by my 1.2 million, by my 1.2 million shares. That would have given me 7 rand. That must have given me 7 rand, the average price. So how do I get my A here? Simple. If I take my 1.2 and I multiply that by 7, that should give me A. So my 1.2 million, I multiply by 7. That gives me 8.4 million. That means my A is 8.4 million. And you can prove it if you take 8.4 million and you divide it by 1.2, it will give you the 7. So I have my 8.4 million here. That simply means my total of my 4.8 and my unknown here is 8.4 million. Okay, so if my total of the 4.8 and the unknown is 8.4, I can get the unknown then. So I simply say 8.4 minus the 4.8. Like that. That's going to give me 3.6. So it means when I issued shares here it was 3.6 million there. Ooh, that was a very interesting one. You saw that one. Okay, that's a very interesting one. You don't have to fight with these figures. You simply ease in and they'll come out on their own. We're together. So let's see now. Can I close this up? So I'm going to say 4.8 plus 3.6. Obviously, that gives me 8.4. And then I say my 8.4. Yeah, let's do it together. 4.8 million at the beginning plus my 3.6 million. We're together. That gives me 8.4 minus the 420. Minus the 420. That gives me 7,980,000. 7,980,000. Like that. Okay, one line, two lines at the bottom. So I say my 800,000. I'm over here now. My 800,000 plus my 400, that gives you 1.2 million. Minus 60, that gives me 1,140,000. These are shares in issue at the end. Right at the end. We good? Okay. That amount, therefore, must then be taken to the statement of financial position. I must take it to the balance sheet. How? Let's see. Okay, so I typed it nicely here then. Okay, so this is what we're doing, remember. This is what we're doing. We cool? Now, where do I bring it? Is it note number 8? Is it note number 7? This one we know. It's our note number 7. So we're going to come here and we're going to say 7,980,000 over there, like that. Okay, what do we need now? Retained income. Let us go. We're given information. Amounts extracted from the books on 31 March. Okay, and then there is our retained income. Balance at the beginning, we were given. Net profit after tax, we were given. Like I said, almost in every lesson that I've been doing these notes. If you don't know how to get your net profit after tax, if you don't know how to get the balance at the beginning, please do make time and watch my previous lessons. What do I need here now? Repurchase of shares. So I'm going to come here. I'm going to say repurchase of shares. Okay, so format. You must know your format. You have to know your format. It has to be in your fingertips. Okay, so I come here, then I'll say, how many shares were bought back? 60,000. So I'm coming here, 60,000. Multiply. Do I multiply by 7? No. Do I multiply by 10? No. What do I multiply by then? So remember, our cash flow statement will record the 10 Rand 80. In the ordinary share capital, we have recorded the 7 Rand. That means in the retained income, that is where I'm going to record my 3 Rand 80, which is the difference. 10 minus this gives you this. Together? Okay, let's go on. So I'm going to come here and I'm going to say multiply by 3.8. Multiply by 3.8. Let's see. Calculator, 60,000. 60,000 multiplied by 3.8. How much is that? That is going to give me 228,000. So I'm coming here. My bracket is there. 228,000. Brackets once again. Don't forget to open brackets. Brackets are of great necessity. And as I come to my ordinary share dividend, before I even calculate my final dividends in my interim, that amount must be in bracket. So let's come to get our interim dividends. Information, very important. An interim dividend of 124 cents was paid on 30 September 2019. Date 30 September. Remember, we give dividends to shareholders. So we need the number of shares. How many shares were we having on 30 September? The beginning of the year, April, we had 800,000. In May, we issued 400,000. So that means May, June, July, August, September. By September, we still had the 1.2 million. The repurchase happens after. So how many shares were we having then? We had 1.2. So I'm coming here, I'm going to say 1.2 million. 1.2 million. I multiply that by how many? By 1.24. 1.24. If you multiply by 124, you have to divide it again by 100. So I advise just multiply by 1.24. So I'm going to say here 1.2 million multiply 1.24. Is that correct? Yeah, that is correct. Then that's going to give me 1,488,000 over here. 1,488,000. Let's add this 2 then. Let's add those 2 and see how much we get up there. My 1,488,000 plus 889,200. That is going to give me 2,377,200. Okay, there's 2,377,200, and we are going all the way down now. Have your calculator close so we can punch together. Here we go. We're going to start with the balance at the beginning. That is my 1,181,250. Then I'm going to add my 2,534,400. 2,534,400. Very correct. Then I'm going to subtract 228,000. Then I'm going to subtract again 2,377,200. Like that. It will then give me 1,110,450. 1,110,450. That concludes my retained income. I hope you enjoyed this one. Where do we take the figure? We take the figure to my retained income. That is retained income in the balance sheet then. 1,110,450 over here. Then I'm going to add this, bring the amount to the top. Okay? Calculator. Plus 7980. 1, 2, 3. That's going to give me 9,090,450. 9,090,450. Like that. That is what you're going to get now. Okay, so remember, we had this one already. Okay, now when you are here, it becomes easy for you to calculate this financial indicator called the net asset value per share. Some of you call it the NAV. And the formula for the NAV is shareholders' equity over the number of shares multiplied by 100 cents. Multiply by 100 cents. Let's see if we can do that. So my shareholders' equity is 9,090,450. I divide this by my number of shares. 1,140,000. I multiply this by 100 cents. My answer must be in cents. 9,090,450 divide that by 1140. 1, 2, 3. Okay, and then that is going to give us, okay, then remember, multiply by 100. That's going to give me 797. 797 cents. Your answer must be in cents. It has to be in cents. So we've calculated the NAV over here. shareholders' equity, note 7 plus note 8, shareholders' equity, divided by the number of shares in issue at the end of the year. Shares in issue at the end of the year. That is what gives us our net asset value per share. In the next lessons, I will show you other ways of doing the same thing again. Let's go. We have an adjustment now that relates to a loan. All right. So I'm going to leave this here. I'm going to give you 2 minutes. Let's take a 2-minute break. And then when we come back, we do this loan adjustment. So I'm going to see you after 2 minutes.
Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
I want you to ask yourself these 3 questions. Number 1, what do I want? Do I want to become an A student or do I want to become an average student? Number 2, I want you to ask yourself, how do you plan on getting there? Are you going to put more extra hours or are you going to just sleep? Number 3, who will be with you in this journey? Because it is important that we associate ourselves with students who have the same vision as us, who want to become a student, who want to put in the extra work, who want to become better at what they do. Unsuccessful people do not plan. They just let life happen to them. But successful people are planning on how they want their lives to be. And right now, you plan on how you want your results at the end of the year to be like.
Welcome back, guys. I gave you 2 minutes to see if you can solve this particular issue. Okay, so it's just a loan adjustment, nothing very complicated. Okay, and we are to record this in our statement of financial position. Remember, our focus is on the non-current liabilities and the current liabilities. But the easiest way to do it is to go back to what you did in grade 10. So I'm going to open a quick loan account here. So here's my loan account over here. All right. So remember, on the credit side, it increases, but on the debit side, it decreases because it is a liability. So I'm going to take the balance at the beginning. So I'm going to say here, balance brought down. That is my balance at the beginning. That's my 3,150,000. That's my balance at the beginning. And then I also have my balance at the end. But after I have that, let me get my balance at the end at the same time. Okay, so, and it's like this, and it's like that. Then I'm also going to have my balance brought down here, which is 2,508,000. 2,508,000. Which here becomes my balance carried down, 2,508,000, like that. And then I have my interest. So I'm going to come here and I have my interest, which comes here. And my interest is 258,000. 258,000. So my interest is being added. All right. So I bring it onto the credit side there. And I'm going to say 3,150,000 plus the 258. So let's see if we can get our adding machine. and get that quickly. There it is. It's going to be my 3,150,000 plus the 258,000, like that. That is going to give me 3,408,000. So here 3,408,000, which becomes 3,408,000. Then I subtract my 2,508,000 minus 2,508,000, like that. That is going to give me 900,000. So that means what we paid here in total was 900,000. But we understand that whatever we paid here, we paid for two amounts. Number one was interest, which is 258. So I'm going to say plus. So in other words, if I get my 900,000, I'm going to say minus 258, which is the interest. That is what we paid for also. Then I'll remain with 642,000. And that 642 becomes my loan repayment plus 642,000 here. That becomes my loan repayment. Then someone will say, but Mr. Simbi, why go all the way when there's a very short way? Okay, what is the short way? If you take your balance at the beginning minus your balance at the end, that should tell you how much you have paid. So if I come here and I say my 3,150,000 minus my 2,508,000, how much is that going to give me? 642. That gives me the 642,000. Okay, so that is what we have paid this year, 642,000. This is what we have done from grade 10 and 11. But we can quickly get the difference between the two loan amounts, okay? And that will tell me how much I have paid this year. Then they say, the capital repayment will remain the same over the next financial year. So what they're telling me is I can come here and I'll say loan, and my loan at the end of the year that I'm owing now is 2,508,000. And I know that I am going to pay the same in the next 12 months, the same. So I can come here and say minus 642,000. And that 642, I'll bring it down here and I call it my current portion of loan, which becomes my 642,000, or I call it my short-term loan. Then I close that bracket. So I'm going to say here now, I can say my 2,508,000 minus 642,000 minus 642,000, like that. And that will give me 1,866,000. 1,866,000. That is what I bring at the top there also. 1,866,000. That becomes my non-current liabilities. Okay, so this is basically what we were supposed to do. Can I move on to the next one then? Let's do that. And I'm coming now to my provision for bad debt. Very key. You have to understand the words that were used in this adjustment. The words are very important. Okay, let's read it in here. They say, the decrease. You can see already the way they're starting this adjustment is different from what you have seen in the past. Okay, so they say the decrease in the provision for bad debts of 2.5 was not recorded. And we are in our balance sheet, where under our current assets, we're going to come and we're going to say net trade debtors. Okay, so I'm going to come here and I'm going to say my trade and other receivables. Trade and other receivables. And my net trade debtors is 881,000. And I am being told that it is the decrease in the provision for bad debt that was not recorded. And in most cases, the adjustment like this, we know how to record it in the income statement of comprehensive income, whereby when it's a decrease, it's going to go to other income. But if it's a decrease, okay, we're back here now. Okay, let's quickly come back. There we are. But if it is a decrease in the provision for bad debts of 2.5, what do you do? Because if it was an increase, that would have meant that we're supposed to subtract more in our trade and other receivables. But since it is a decrease, this 2.5, we're going to come and we're going to add it now and say plus 2.5. Because we have a decrease in provision for bad debts. Okay, we're going to take again another 1 minute short break, and then I'll see you after.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you are gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
And welcome back, guys. Let's continue. So I was explaining the decrease in the provision for bad debts that was not recorded. It is only the decrease that was not recorded. So you have to see that this adjustment is different from the ones that you have been doing. You have been doing the ones that say adjust the provision for bad debts to, or adjust the provision for bad debts by. And you can see how different it is when this one comes in, because this one is saying the decrease in the provision for bad debts was not recorded. You don't have those words, the to and the by. So in this case, because it is a decrease, we come and we add it to our trade and other receivables. If the same adjustment had been brought forward and it was an increase, then we would have come and subtracted that particular increase. But in this case, it was a decrease. So we come and we add it to our trade and other receivables. Let's go on to the next one. On the next one, okay, so as we move on to the next one, we are going to find another adjustment as we move. Okay, I can see that this provision for bad debts adjustment wants us to do it more and more again. All right, so let's see as we move on to the next one, the next adjustment that is going to come. The next adjustment that is going to come has to do now with our commission income. But before we do that one, we will take again another very short break. We continue. So we're going to take again just a very short break again, and then we continue.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, or whatever that gift is, strive for excellence.
And welcome back again. We're going to move on from this adjustment and we're going to go now to the next one, which is commission income. This is a very simple one. It reads, commission income for March 2020, 41,900 was still outstanding. All right. So this is your accrued income. This is accrued income because it is commission income that is still outstanding. So that means I'll come to my trade and other receivables. Then I'm going to say plus 41,900. That is my accrued income. I'm going to move on. Then the next one says the company has 3 directors who earn the same monthly director's fee. One director has not received his director's fees for March 2020 yet. Remember, March is the last month of the financial period. So we want to see how we can get these director's fees. So we're told the company has how many directors? 3. So let's bring them up. This is 1 director, 2nd director, there is the 3rd director. And we're told that 1 director has not received his fee for March and they're silent about the other 2. That means they were paid in full, 12, and this one only got 11. That means it's 12 plus 12, 24 plus 11. That gives you 35. So in total, we've paid for 35 months on our director's fees. So if I can take my 2,275,000 and I divide it by 35, how much are we paying per month? So it's going to give me my 2,275,000. I divide that by 35. It's going to give me 65,000. 65,000 per month. So it means if I'm paying 65,000 per month per director, the 1 director that I'm owing 65,000. So that goes to my trade and other payables. That's an accrued expense. So I'm going to quickly come here and I'm going to say now on my trade and other payables, I'm just going to come and say creditors control, that is my 1 million. You see this one here, 1,318,000. 1,318,000. Then I'm going to add my 65,000. That is what we owe this director. I think this one was a very affordable adjustment. Okay, let's go to the next one. Next adjustment then reads, rent for April has been paid. Remember, the financial period begins in April 2019 and it ends on 30 March 2020. But we are told now that rent for April also has been received. Okay, rent for April has been paid. This is rent expense, has been paid. The rent was increased by 25%. So what we're going to do is we're going to come here and say, we know that in total, we have paid rent for how many months? Let's see, we have to record in the statement of financial position. So in total, we have paid rent for how many months? We know it's 13 because it was supposed to be this 12, then plus that one extra month. So we paid for 13 months. So we're coming here to say it's 13 months that we've paid in total. The beginning of the financial year is in April. So we say from April 2019. So it's going to be April, May, June, July, August, September, October, November, December. For these 9 months, rent had not increased because rent increased on 1 January. So we have 9 months where we're paying rent of 100%. That's 900. Okay. And then we say 13 minus 9. That is what gives us the 4 months. So the 4 months are from January, February, March. The year was supposed to end, but it goes on to April, which is what we have paid for here. So that was at 25% more. So it becomes 125 over there. So we're going to come and say 4 months, 4 times 125. That is going to give me 500 over here. So it's 900 plus 500. That gives me 1,400. What I want is rent after the increase. Can I ask you a question? If I were to take this 364 and divide by 13 months, would that be correct? No, it would not be correct because the rent was not constant throughout. So I would come here. What I want is 125, and which is the rent after the increase. After the increase. So, and what I have is 1.4, and what I have in rents is 364,000. So I'm going to come here, then I'm going to say what I want is the rent per month, 125. What I have is the rent for 13 months, which is 1.4. And I multiply that by the rent that we've paid for the 13 months, which is 364,000. That is going to give me 32,500. So I come here, that gives me 32,500. That is my prepaid expense. So once I've paid an expense in advance, it comes to trade and other receivables. I'm going to say plus 32,500 over there, like that. We good? All right. So we're coming to the very last adjustment in today's class, and it has to do with our income tax. All right. So we are told that the correct net profit after tax, after all adjustments, is 2,534,400. This is the net profit after tax. You need to remember that in our statement of comprehensive income, we have what we call net profit before tax, that is 100%. And then we have income tax, and our income tax is 28%. Then we have net profit after tax, and that is going to be 72%. And we're being told that the correct net profit after tax is 2,534,400, which is that one over there. So what we want to know is how much was the income tax for the year. So we'll say 28 over, and what we're given is the net profit after tax, which is 72, multiplied by the 2,534,400. Then I'm going to come here and I'm going to say, all right, what I want is the 28, and what I have is the 72. And then I'm going to multiply that by the 2,534,400. 2,534,400. And that is going to give me 985,600. So it gives me 985,600. That is our income tax. Now, our income tax is supposed to be 985,600, but we have already made provisional payments of 972,000. So at the end of the year, who owes who? Because we have already paid 972, yet our income tax must be 985,600. So in this case, we owe SARS. So we're going to come here and we're going to say our SARS income tax. Then we are going to now say what we have as our provisional payment, all right, is 972. And yet our tax is supposed to be 985. So I'm going to say my 985,600 minus my 972,000. And that's going to give me 13,600, which is payable over to SARS. There are other ways that you can use in a calculator that can give you a positive or a negative amount. If it's a positive, then it goes to receivables. If it's a negative, then it goes to payables. In next week's class, I'm going to show you that particular method. So make sure we make a date next week, Friday, same time at 2 p.m. I'll be here waiting for you. This is our complete statement of financial position. So this amount here was already given. This is what I was talking about from note number 3. If it was not given, we're just supposed to take the entire carrying value amount from note 3 and then we'll bring it here. And then we've done all the adjustments here. Then our total assets become 14,174,250. Then we come to where we added our equity. Remember where we ended up calculating our net asset value per share, because we added those amounts to get up there. And here is our loan, and we did it in a very simple way where we simply took our balance and then we subtracted the 642, and then we ended up with that amount. And then for us to get our current liabilities, remember we have to come and add all of that, and the amount is at the top there. Then end up with 14,174,250. My good learners, thank you so much for joining me in today's class. It is always a pleasure and a joy to have you. Let's make a date again. Next week, Friday, same time, 2 p.m. I'm here. Make sure you have the worksheet, calculators, pencils are sharpened, pens are also ready, and I need your minds in my class so that we can enjoy our calculations. Until next time, happy studying and enjoy your calculations. Goodbye.